Hi, Steve Schlegel here. You made it. This is the 6th video in the series on LLCs and small business corporations and how to protect your personal assets, liability protection and asset protection. And we've talked about how to make sure that we have documented and clothed our LLC or a corporation in a way that helps protect us from claims. And so we learned about having organizational documents in place. We learned about all the other documents that kind of flesh out the rest of our clothing, or wardrobe, if you will, to make sure that we're as protected as possible. We understand the two shall not be one, but they shall be separate. And you looked at how to do that and how to document it in minutes. Now there's 7 last traps that I want you to think about. And so we're going to look at these and try to determine whether or not they're an issue for you. I just want you to be aware of them. No rocket science again here. This is simple stuff. And the first one is how you sign documents. Okay, a lot of people, when they have their own entity, they're signing a contract, they'll just sign their name and call it good. You never, ever want to do that. You never want to sign your name, comma, owner. That gets done a lot. Never do that. The proper way to sign on behalf of an entity is this, and we'll use me as an example. So if I'm signing, I'm going to sign my name, and right next to it, it's going to have printed out Stephen D. Schlegel, President, Stephen D. Schlegel, PC. I have a professional corporation. So I've got my name, my title, and the company name, and that's really important that you do that so that the world knows you're signing on behalf of the entity, not personally. We want to be separate. The two shall not be one. Okay? And related to that, you can think about the email, the signature on your emails. A lot of us have automated signatures on our emails, and people will forget about that. And they'll put Stephen Schlegel, owner. It's like, don't do that. The same sort of thing. Stephen D. Schlegel, president, and then the name of the company. You want to be sure that you do that on your business cards, on your emails, and your marketing materials, and so forth. Never hold yourself out not including your title or your role within the company. You always want to be representing the company, not yourself. Okay, that's issue number 1. Second trap is capitalization, and that's just, if you will, a fancy word to say that you didn't take all the money out of the business every year. And let's face it, for a lot of small businesses, we get to the end of the year, we got to pay taxes, and we want to buy some stuff. And so what do? We take out every dollar that's left in the business at the end of the year. And that's absolutely going to screw up your asset protection or your liability protection. So what you need to do is make sure that you leave enough cash and other assets in the business to cover your ongoing business expenses and a reasonable reserve. You need to have that in there because that's what any other reasonable company is going to do. A professionally run company is not going to drain it at the end of every year and then hope for the best. Rather, you're always going to have a reserve in order to cover that. And sometimes in the accounting profession, we call that having adequate working capital. And so you want to make sure you do that. And if you don't know how much it is, talk to your accountant about it. Okay, they can help you to understand what a reasonable reserve might be and what that minimum working capital would be that you would need. And then you won't fall into the capitalization trap. The third trap is business purpose, and I run into this one a lot. Someone learns about the asset protection or liability protection that LLCs or small business corporations have, and then they go, hey, Steve, my house, I could put that in the LLC and have some further protections there should I get sued. And I have to say, that doesn't work. Okay, and the reason it doesn't work is there's no business purpose to putting it in the LLC. Because if you put it in the LLC and then you get sued for something, then the other attorney is going to say, why did you have your house in the LLC? And ultimately, you're saying, so that nobody can get to my personal assets if I get sued? That's not a business purpose. That's avoiding your creditors. And that doesn't work. So anytime you've just got personal assets, don't just put them into an entity and think that you're protected. It's for business purposes, investment purposes, and so forth. That's where it works. So that's how you avoid that issue. Next issue, Paying company bills. Never pay company bills with a personal check or a personal credit card. Remember the credit card issue? Always make sure you pay company bills with company checks and company credit cards. Don't commingle. Don't make two one. Make sure that you have a separation. Likewise, the next issue is taking and paying personal bills with your company checking account or your company credit card. Okay? You can't do that either. You have to pay your personal bills with your personal checks or credit cards and so forth. If you don't have enough money there, then you need to make a transfer from the business and document the distribution, send it over to your personal account, and then pay the personal bills. Don't take a shortcut because you think, it's my business, I can do whatever I want. Remember, the two shall become one is not something you ever want said about your particular business. Keep it separate. And it's the same thing on the next one, which is using company assets, taking the company car. Maybe it's cell phone issues that you haven't documented. Maybe it's using a laptop for non-business purposes and so forth. It's okay to do some of those things if you've documented it and you have a policy for it and you've accounted for it properly. But without the documentation, don't go there. That's just going to be another way that the other attorney or the IRS hammers you and gets to your personal assets. Okay, the last one I want to talk about is what happens when we sell our business. Lots of times when you sell your business and they're going to write the check for the proceeds of the sale, they'll write the check to you, right? Because the business is going away, so they'll write the check to you. Now, in a traditional asset sale where I'm selling the assets of my business, that check has to be written to your entity, not directly to you. And so that's a key to do that. Or let's say that you've got a truck in your business and you've been using it for a while and you decide that you want to sell it and the company doesn't really need the money. And so you're going to take it to the dealership, you sell it, and you have them write the check to you, and then you go buy something else with it. Okay? It wasn't your money. That's called embezzlement. You're taking the company money. So when you sell a business asset and they want to write the check to you, you got to know it needs to be written to my company. And then once it's in the company, then you can take it out as compensation, dividends, distributions, or whatever, and document it appropriately, of course. But never take that check directly. And you heard me use the word embezzlement. And you go, Steve, it's impossible for me to embezzle from my very own company because it's me. No, the two shall not be one. They shall be separate. And so it's critically important that you remember that it has to be separate. There have been court cases where the IRS has come along and claimed embezzlement by the owner for simply taking undocumented money from the company. And technically it is embezzlement. And so we don't look at it that way because it's like, I'm the owner, I can do whatever I want. But if you get yourself in trouble, they can use things like that just to make your life that much worse. So just follow the rules, have a paper trail that accounts for things, have checks written to the right places, and you'll be just fine. None of these 7 items that I've talked about are difficult to do. It's just being aware of them. And most of the time, it's always, we don't know what we don't know. I want you to have this in the back of your head so that you don't make a mistake on that. Okay? And as I said in the previous video, find an advisor to help you with that. Somebody close by, an attorney that you know, or whomever. For certain clients, will take and help you with that. We have a program that you can sign up for a single fixed fee that will help take care of a number of these things for you and give you a sounding board if you have a question on something. So you can contact us. Information's in the area below the video here. And otherwise, make sure that you're protecting your financial future. Don't drop the ball on it. This does not take a lot of time and it's not rocket science. So I want you to be safe. Thanks for watching these.